Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be taking a look at a little bit of a bias assistance, extra confluence, whatever you want to call it, essentially a new trading tool that you can potentially implement in your trading to have a little bit of a higher probability or even more confidence in yourself as you are executing those buy and sell positions in the market, right? And what is that tool going to be? Well, we're going to be discussing a little bit of information about the US dollar currency index, which essentially measures the US dollar strength against multiple currencies. And we're going to be finding out more information about that in just a bit. But for now, understand that we're going to be discussing a little bit of information about the US dollar currency index, right? Nevertheless, you still want to be assessing structure, right? This is not the be all end all. You will still need to understand structure. You will still need to understand liquidity. Where is it holding? Where is it sitting? Where are we targeting? And points of interest, confirmations, and even time, right? All the pieces to the puzzle still need to be available for you to execute a profitable position, but having that US dollar currency index confluence can give you that little boost that can improve your trading, right? And if this sounds like something you want to learn today, make sure you stick through the entire video because we're going to be discussing just that. So traders, we're back on the charts, and the very first thing that we're going to be doing is actually heading over to google.com over here, right? And as you can see, this is a very simple Google research. Everyone is able to access this information for absolutely free, right? I'm just clarifying that because it does seem sometimes that people have lost their ability to actually do some sort of individual research and just want everything to be handed out in a golden plate without actually putting any sort of effort into what they're doing, right? So we head over to Google, we Google this particular keyword, and we now have this bit of information over here, right? If we open this, what does this picture tells us? Because this is actually giving us pretty powerful information, right? If you can apply that to the charts. So we look over here and it says that the DXY, which is the US dollar currency index, is being measured against these currencies over here, right? The Canadian dollar, the pound, the Japanese yen, the euro. What else do we realize? Well, we can also see that the DXY is mostly being measured against the euro, more specifically in and about a 57.60%. Well, if you can apply that information to the charts, you should be able to understand that the Euro USD pair, right? Once again, the Euro USD pair and the DXY are going to be most of the times inversely correlated, right? And we're going to be taking a look into that in just a second. But for now, understand that, right? These are the currencies that the DXY is being measured against, and the euro is the one that is having more influence into that, right? So with all that information, guys, we can now quickly go back to the charts. And if I actually split my screen in two so that I can fit two different markets, right? Should understand that we have the DXY to the right on the 1 hour time frame. Let me actually add the Euro USD on the 1 hour time frame. If I put them like this, just side by side, take a second, pause the video, and actually type in the comments below what do you realize, because there's specific information here that is relevant and important, right? Let's actually pause the video and try to identify what can we realize as we're looking at these two different markets. So if I actually go over here and invert the scale, you will see that very clearly, right? You can now understand, and if I actually zoom out a little more, you can see how similar these two markets look as I inverse the DXY, right? So this is pretty powerful, right? Because now if we actually flip the DXY back up, we can now realize, for example, if we look at this mitigation, right? This happened 9th November, 5 a.m. in the morning, right? And we look at Euro USD during that same period, which is over here. You can see that that is being shown to the left with that dotted line over there. You can see that, and let me actually grab the tool. Where is it? This one over here, that as the DXY was mitigating this origin block over here, right? If you've been following my channel for a while, you should understand that we do have some sort of break over here. We have some trend and liquidity being taken. We have a new high being established. We have a retracement leg being built down, right? We can see how order flow is shifting as we're creating that retracement leg. You can see that as we mitigate this block over here, the the Euro USD pair is exactly doing the opposite thing, right? We look over here, we have the same thing occurring. We have a potential lower high, we break structure over here, right? We create a new lowered low. Now we're retracing, building that bullish order flow over here, right? Same thing is occurring. We're building that bullish order flow here. And as Euro USD is hitting this supply zone, bearish order block, whatever you want to call it, you can realize that the DXY index is hitting that opposing demand zone, right? And is potentially shifting higher, which is essentially the same thing that occurs with the euro, right? We hit the supply and we start moving lower, and at the same time the DXY starts moving higher because they are correlated. And if, as a general rule of thumb, is the euro USD is going up, the DXY will be going down. So how can we use this information? Well, now the next time you want to be trading Euro USD, you can have that DXY pair to your right, and you can look for that confluence in information, right? If you want to, let's say, take sells on Euro USD, right, for whatever reason that may be, let's say you were watching this POI over here, you can simply confirm that the DXY is also hitting some sort of valid demand zone. Once again, you want to be seeing the opposite. You want to be confirming that the DXY is hitting some sort of demand zone and that that is also shifting and potentially moving higher. Then that would mean that the Euro USD dollar will be moving down, and now you can have more confidence and more information in regards to what you can expect to Euro USD to occur, right? Because you can simply just wait for these two things to line up, and now you have more confluence and information. But once again, you don't want to be blindly doing that. You still need to be in the right Euro USD point of interest. If that is not the case, then well, you can get a reaction over here, right? And I'm sorry, this is getting pretty messy. Let's see if I can get rid of some of the stuff. Oh, I actually can't. So let's just do it like this. So as I was saying, guys, you still want to be assessing structure, liquidity, points of interest, all that sort of stuff, right? But if you see that your USD is hitting supply or an area where you're interested in getting involved, you can now simply add to your analysis and confirm that the DXY structure, liquidity, points of interest is also making sense for it to be doing the opposite thing, right? Because if it's not making sense, then it's not going to shift and it's not going to give you your trade, right? So please understand that information because that is really powerful. And just as a little bit of more information, the DXY generally follows the daily cycle theory very well. So you can also be assessing that, right? And another tip that I will give you with the DXY is that the DXY tends to shift market direction much faster or even sooner than the Euro USD will ever do it, right? So if you see that, let's look at this example specifically. We can identify this point of interest, the DXY trades into that, and then you see the shift occurring over here while let's say that the Euro USD is still working on this mitigation that actually occurred last week. then you can take an early entry because you see that the DXY has officially shifted back up, so you can expect that the Euro USD will follow, because most of the times, and we're going to be writing this over here, DXY sets direction, Euro USD, forex, whatever you want to call it, follows that. So if you're ever unsure if that particular point of interest that you're watching in your Euro USD pair is ever going to be holding, you can always assess what DXY is doing. And if you see, hey, for the DXY at this point in time, it makes perfect sense for it to continue up for the reasons that we've been explaining before, such as the trend line liquidity building, right? The expansion that we can see over here, the creation of that new high, right? The establishment of this potential higher low, and the retracement that is potentially coming to an end as we're trading into the block. And you can see that Euro USD was doing the same thing, just literally the opposite, right? Euro USD was creating that low instead of creating that DXY high. Euro USD was creating that retracement leg back up, while DXY was creating that retracement leg back down. Your sort of DXY shifts and starts going bullish. Euro USD takes a little bit more of a time, but essentially does the same thing and provides you with this sell-off, while DXY is literally flying over here, right? So that's why it's always important to leverage the news reports in regards to the US dollar in some sort of degree, right? You don't need to be the fundamentals expert to trade the way we view the markets, but you still want to be assessing and avoiding trading during high impact news reports, or leveraging that information into your advantage if you actually have the ability to do so, right? So once again, guys, I'm just giving you some information and examples into what you can be doing with the DXY and Euro USD correlation, right? Just to give you one more example, you can be using the DXY as a measure for your targets, right? Let's imagine once again you've got involved in buy positions over here, right? Let's say that this is a reasonable target over here, because you understand that this is the opposing end of the range, and you can never be sure if that's going to be taken out or that is going to be respected into continued sales lower, maybe into the origin over here to then possibly continue up. But you don't want to be taking that risk. You actually decide, hey, I'm going to be taking profits over here. Where, well, if you look at Euro USD, you can see that this block over here represents this bullish block over here. So now when you're taking that Euro USD sells, you can understand that, hey, as the DXY is hitting that block, Euro USD should be hitting this one over here, and I'm going to be partialing, taking profits, whatever you really want to do, right? Remember that the aim of this channel is to help you with your trading, and you should be able to sort of digest the information and apply it in a way that makes sense to you and your trading as an individual, right? Just understand that I'm giving you some information and you have to apply that to the charts in the way that you deem important or useful for yourself, right? So understand that, right? The DXY tends to sort of do what the Euro USD will eventually do faster, right? Just in the opposite direction. Understand that the DXY is more likely to hit this block faster than the Euro USD will ever do it, because it tends to move quicker, right? So I'm pretty sure some of you guys may have already known this information, but I'm also sure that this can help many traders out with their journey. So that's why I'm sharing this with the YouTube audience and community. So with all that being said, guys, that is going to be the end of the video, right? The main takeaways here is that the DXY is mostly correlated with the euro. So trading the euro US dollar and having that DXY confluence is a very smart idea, right? And so something to follow. So keep that in mind, guys. Every time you're trading Euro USD, make sure you have you've done analysis on the DXY as well, because you should be seeing sort of the opposite thing occurring if you want to be in the right POI, sort of aiming at the right direction, right? So understand that. But now, with all that being said, guys, I appreciate every single one of you actually tuning in. Please leave a like, comment, subscribe if you actually found some value over here, because that helps me with the YouTube algorithm. So if you want to be doing that, I would gladly appreciate that. Once again, remember that the mentorship page is only available over here. I've received plenty of messages from people telling me that they're getting scammed. So please stop doing that. Just understand that I will never be messaging you asking for money or anything similar to that, and that this is the only page where you can have access to my mentorship, right? But now, with all that being said, guys, I wish you all good and profitable trading, and I will see you guys very soon.